Hey guys, welcome back to another episode of Kaizen Crypto, where we break down the chaos of the crypto so you don't have to. The US President Donald Trump just said he only cares about one thing, being number one in crypto.
I only care about one thing. Will we be number one in crypto? Crypto has turned out, and in that sense, I've been right. Crypto's turned out to be a massive industry, if you want to call it that.
And on the top of that, Standard Chartered CEO, a 1 trillion bank, says all transactions will be settled in crypto and money will go fully digital.
Our belief, which I think is shared by the leadership of Hong Kong, is that pretty much all transactions will settle on blockchains eventually, and that all money will be digital. Think about what that means, a complete rewiring of the financial system.
So naturally, people are asking, if BlackRock is buying, Michael Saylor is buying, countries are buying, banks are buying, then why is Bitcoin falling? That's $1 million question. So today in this episode, we will break down why Bitcoin's falling, who is selling, and what's really happening under the hood. Spoiler, it's not who you think. For some, it will sting. For others, it's pure opportunity. So before moving forward, don't forget to like, subscribe, and ring the bell so you never miss our next deep dive. All right, let's jump in.
Crypto's turned out to be a massive industry, if you want to call it that. And I'm very proud to say that we are far and away ahead of China and everybody else. Now, China's getting into it very big right now. If you want to go after people, you're going to kill that industry, and it'll be very bad.
Trump's statement lit a fire, calling for the US to lead in crypto. That's a single move kicked off a new global race for crypto supremacy with China, the UK, and others already in motion. He wasn't wrong when he said there will be a winner-take-all market. There won't be second best. Every nation wanted to dominate Bitcoin and blockchain frontier. Even Nigel Farage, one of the frontrunners in UK leadership, said UK must reclaim its global edge in crypto innovation.
Folks, it's happening. We're being left behind. There's a global boom in the trade in digital assets, in the use of stable coins, in the usage and investment in all forms of cryptocurrency. We've literally turned our backs on it, both the Bank of England and the FCA being guilty of this. The reason the city succeeded for hundreds of years is that it innovated, it took risk, it saw what the future direction of markets and consumer and customer and commercial demand would be. And we have done absolutely none of it. And frankly, I believe it's a disaster. We should be leading the world in these 21st century businesses. So our aim would be to sensibly deregulate a rule book that was written for the European Union, not written for the City of London, to think globally, and to have a much more open debate with the Bank of England.
He called it the British Revolution, a call to arms. And with all that energy, the global adoption news, and after the massive sell-off, we should be seeing 150k, 200k like analysts predicted. But instead, Bitcoin's been sliding since beginning of October, from 123k near all-time high to about 101k as of now I am recording. And people are in panic mode. Who is selling? Why? The answer might shock you. It's not institutions. It's the OGs, the long-term holders. Analytics show that the people who hold Bitcoin since 2010, 2012, the early miners, whales, and true believers are selling large proportions of their holding. When Bitcoin broke past 69k, then 109k, and then 126k, these waves of red selling wars started appearing, all from long-term wallets moving their coins. In crypto terms, these people who hold Bitcoin for 12 plus months, but the volume suggests these are not 2023 investors. These are the OGs cashing in. Check on chain data breaks it down clearly. Bitcoin's treasuries companies, ETFs, short-term holders, long-term holders. What's interesting? The realized cap changes points directly to long-term holders, not ETFs or treasuries. Let me explain simply. The realized cap is the total value based on when each Bitcoin was last moved. If you bought Bitcoin at 10k and later moved or sold it when it hit 60k, you have realized 50k gain. So when the long-term wallets suddenly move billions in Bitcoin, that means profit taking, not panic selling. And this chart proves it. See those green spikes above the line, that's profit taking. The red sections below the line, that's loss taking, where people start selling fear. Right now we are seeing heavy green bars, meaning whales and long-term holders are cashing out profits in billions. A few weeks ago on Simply Bitcoin podcast, George Bodine broke down exactly this.
I'm surprised, if you want the truth, that we are where we are today. I've mentioned this before. I'll say it again. Between 58K and 93K, we sold 1 million coins out of long-term holders, people that are convicted. When you get past 5 months, that's Glassnode's cutoff for long-term holder. There is an algorithmic determination of what the likelihood of selling a Bitcoin is. It's very low. And yet at the same time, we had 1 million coins, 40,000 a day at one time. We've also, over this rise up to about 117, 118K, had a lot of other long-term holders starting to sell into the market. They have already into the 120s. You know, the other thing is that, thinking of that, Glassnode was just putting out some research that I was reading maybe yesterday, and it had to cover with the fact that between about 115 to 117,000, we had tremendous turnover in coins there. A lot of new buyers stepping in. And now that we're past 120 decisively, that is actually flipped. So instead of resistance at that level, it's not like we're breaking through it. It basically is a floor. And I think that it's on this side, this sell side pressure that we've seen, which has been, like I said, very strong. And yet, regardless of that, whether it's Bitcoin treasury companies, which have kind of fallen off a cliff as far as demand, or the ETFs, or just demand through adoption, or demand through corporate ledgers, we are seeing enough demand there that it's keeping our price point stabilized so that we're doing these stair steps. In fact, you could look at 2025 and it's just basically just a slow chop to a higher value. That's the best kind of market you want to see. I mean, that is what is going to carry us into a much higher price point.
Despite the red candles, adoption hasn't slowed down. Treasuries companies, countries, institutions, they are still accumulating. And retail still hasn't shown up in full force yet. Even though many expected 150K, 200K, or even 475K Bitcoin by now, the fundamentals hasn't changed. Global rotation is happening quietly but powerfully.
One of the bigger things that's happened recently is that Wall Street has woken up to what they call the monetary debasement trade. We've been talking about that for 5 or 10 years, right? JP Morgan termed it the monetary debasement trade. You know, Mohammed Al-Arian came out and spotted it as if he'd been known it for the last 5 years. I mean, he's a bandwagon jumper. He's very late to the game. And, you know, JP Morgan, the guy, you know, whose CEO basically hated Bitcoin, thought it was, you know, a Ponzi scheme. They've now decided to accept it as collateral. So, you know, what's going on is Bitcoin is winning in all these different formats. But, you know, historically at government levels and above, you know, gold has been money for 5,000 years. And if there's a monetary debasement trade to be had, they're not quite ready for Bitcoin yet. They don't understand it. They're afraid of it. Quantum, all the FUD is still existent in a lot of minds. And I deal with gold bugs 24/7 who can't get over the fact that it's money that's not physical. And I'm like, money's always been a ledger, but they can't get there. And so, you know, these guys are just doing what they've traditionally done, and they're going to get to Bitcoin. They're just not ready yet. I mean, I kind of think of them as like, you know, pre-evolved people, sub-evolved people. And eventually they will evolve to the level that they know that Bitcoin is far superior to gold. But, you know, it's Churchill, right? Americans do the right thing after everything else. First we'll try gold, and then they'll realize that's not going to work.
The world has always rotated from equities to gold in times of fear. And now it's rotating from gold to Bitcoin, the new digital monetary standard. Bitcoin is simply a superior store of value, borderless, verifiable, and resistant to manipulation. And as the US and other nations continue printing money and stacking up debt, one truth becomes clear. It's only a matter of time before governments, not just companies, start holding Bitcoin as a strategic reserve. This is a long-term game. I don't look at the daily chart unless it's for the quality videos like this, because until the global debt problem, money printing, and currency manipulation disappear, my Bitcoin thesis doesn't change. It is not just a trade. It is a shift in how money, power, and freedom work. So the question isn't why Bitcoin crashing. It's, are you patient enough to stay the course? Will you be like the OGs who held Bitcoin for 10-15 years, or the next generation who hold till 2035, 2040, or maybe longer? Because those who understand Bitcoin's purpose, they are not watching price. They are watching history repeat, but this time on the blockchain. And finally, Bitcoin isn't dying. It's evolving. Crashes don't kill revolution. They reset them. And this one, it's global. Thanks guys for watching. Stay happy, stay blessed, and I will see you in the next episode.